XRP could see a massive overnight price surge. And I'm not talking about a small double or triple. I'm talking about a seismic shift that redefines the financial system itself. This is what's known as the Fix theory, a concept put together by the late Will Fix, a man whose life story is almost as fascinating as the theory itself. I had an entirely different script ready for you today, but I scrapped it. Instead, I want to speak straight from the heart and straight from the mind, because this deserves to be told the way Will envisioned it. Will Fix wasn't just another crypto enthusiast tossing around speculation. He was a serious businessman running bail bond companies in 27 countries early in his career, owning multiple insurance agencies, and operating at a level most people can only imagine. When he talked about XRP, it wasn't just from a fan perspective. It was from someone who understood global finance, risk, and opportunity. His Fix theory takes everything we've heard about XRP and flips it into a far bigger picture. Before I go any further, this isn't financial advice, but what you're about to hear could make you rethink everything you thought you knew about XRP's price potential. The way Will explained it was simple but powerful. Retail investors, people like you and me, could push XRP to $5 or $10 with enough buying and a few institutional inflows. That's easy to picture. But that is not what XRP was truly built for. This wasn't designed to be just another crypto situation. From day one, XRP's core purpose has been to move massive amounts of value. And I mean massive. Think about the institutions Ripple works with. Some of the largest banks in the world, central banks, payment providers, all moving billions of dollars in value every single day. XRP is the bridge asset in this system. It's the lubricant for the engine that will be running the future of money. Bitcoin, despite all the hype, cannot do what XRP can by design. And yet, Bitcoin trades at over $100,000 right now, while XRP sits at just $3.19. Now, before we dig deeper, if you want to be among the people who spot the next wealth explosion before it happens, I've put together something that will change the way you invest forever. In the pinned comment below this video, you'll find the Ultimate Millionaire Investor Guide. Find 100 times stocks, a complete blueprint with videos, documents, and real examples that show you exactly how to identify assets with explosive upside. This is not something you want to check out later. This is something you grab now before you miss the opportunities unfolding in real time. Now, back to the fixed theory. The Ripple is now over the hump. If you've ever been in sales, you know there's a stage where you get constant rejection. Ripple went through that in its early years, pitching their vision to banks and regulators who weren't ready. But today, it's different. They have well over 300 major financial institutions on board. Years ago, court documents even revealed over 1,700 NDAs. And that was years ago. Imagine how many more there are now. Being over the hump means they've passed the hardest part. Now they're in the sign-up phase. Central banks, global banks, financial giants, the kind of players who don't just move millions, they move trillions. And when those trillions start flowing through a blockchain-based settlement system, you can't have the bridge asset XRP sitting at pocket change prices. It simply wouldn't have the liquidity capacity. Here's the problem those banks faced when XRP was around $50 and even now at just over $3. If you have billions of units in circulation but a low per-unit price, it limits the scale of high-value transfers without destabilizing the market. In other words, the price has to rise dramatically for XRP to perform its role without friction. That's why Will insisted that at some point there must be a fix, an agreed-upon higher price for XRP to satisfy the liquidity demands of the new financial system. This isn't about hype. This is about function. If XRP is going to settle, not just billions but trillions in daily transfers, its price can't be in the single or low double digits. Some experts like XDC developer Quincy Jones have said asking for an exact XRP price is like asking which race car will finish at what exact time in a NASCAR race. You can't predict it perfectly, but you can predict its placement where it's going to rank in the financial system. Right now, XRP is sitting in the top tier of assets positioned for the global liquidity bridge role. That alone tells you it won't remain cheap forever. Will used an example figure of $25,000 per XRP in his talks, not as a prediction set in stone, but to illustrate the scale needed. Others have thrown out numbers in the thousands. Even the IMF chatter that Linda Jones referenced pointed to XRP being a done deal for a high-value role with pricing already decided behind closed doors. That's not something you hear about meme coins or speculative projects. That's the language of infrastructure. And here's where things get even more interesting. Regulations are finally arriving. For the first time in crypto history, we're seeing a framework that will allow big money, real institutional capital to step in without hesitation. That's been the missing piece. You can have the best tech, the best partnerships, and the perfect use case, but without regulatory clarity, the giants stay on the sidelines. Once they step in, the switch gets flipped, and the system needs XRP at its operational price point, not its speculative retail price point. This is why the $5 to $10 targets so many retail investors talk about are just short-term thinking. Sure, those numbers might happen along the way, and if someone wants to take profits there, that's their choice. But those numbers have nothing to do with XRP's real intended value. The intended value is tied directly to the amount of global liquidity it will move. And that's a number far beyond what retail speculation could ever achieve on its own. If you're still holding XRP when this transition fully plays out, you won't just be holding a coin. You'll be holding one of the most strategically important assets in the new global financial order. The same asset banks will be using to settle cross-border transactions instantly. The same asset that will be leveraged for loans, for yield, for large-scale liquidity operations. And as Wilfix made clear, the goal isn't to get out early with a few $1,000s in gains. The goal is to let XRP do what it was built to do, and in doing so, re-prick itself to a level that reflects that role. Now imagine being on the right side of that revaluation, not after it happens, before when you really think about it. The fixed theory isn't just a prediction, it's a blueprint for how a global liquidity asset must function. The system doesn't work unless XRP's price aligns with its purpose, and that means what's coming is less about speculation and more about necessity. Now, before I go deeper into how this transition could unfold, let me quickly remind you, if you haven't yet grabbed the Ultimate Millionaire Investor Guide, Find 100x Stocks, from the pinned comment, do it now. This is the same framework I use to spot opportunities like XRP before they hit their inflection point. It's packed with videos, documents, and examples that make it practically impossible to look at the market the same way again. And while you're there, don't forget you can also get free NVDA stock worth up to $1,000 with just a $100 deposit using my Moomoo link. Both are in the pinned comment below. Here's why the pricing fix matters so much. If XRP stays cheap when the floodgates of institutional adoption open, the amount of tokens needed for each large transaction would be huge, creating unnecessary volatility. But if the price is higher, much higher, a smaller quantity of XRP can settle the same massive transactions without disrupting the market. That stability is critical for central banks and global institutions. In Will's view, once Ripple got past the rejection stage and into the sign-up phase, which is exactly where we are now, the only thing left was to bring the asset's price into alignment with its role. That's the part retail investors often overlook, because we're so used to thinking of price purely in terms of demand versus supply. In reality, for something like XRP, price is also about operational efficiency. Imagine a future where $1 trillion in daily settlement flows across the XRP ledger. At $5 per XRP, that system would be inefficient. At thousands of dollars per XRP, it becomes seamless. That's the kind of revaluation the fixed theory envisions. Not as a wild gamble, but as a functional upgrade to the world's financial plumbing. And when this shift happens, it won't just be about banks sending money across borders. Ripple's partnerships and integrations are setting up XRP to be a backbone asset for lending, yield generation, collateralization, and more. Think about mortgage loans, auto loans, business loans, all instantly collateralized or funded through digital assets with XRP in the middle as the liquidity bridge. Now, for anyone still doubting whether such a leap in value is possible, remember this. XRP already has the partnerships. It already has the speed, the cost efficiency, and the interoperability. The missing ingredient, regulatory clarity, is now sliding into place. And historically, once that happens in any financial market, the capital follows fast. The IMF, BIS, central banks. These aren't organizations that take years to decide once a framework is in place. They move decisively, and when they move, they do it at scale. That's when we see the switch flip, and the new price, the functional price, becomes the market reality overnight. That's why the idea of selling at $5 to $10 doesn't make sense for those who truly understand what XRP is built to do. That might be fine for short-term traders, but long-term holders who see the full vision will recognize that the real gains happen after the speculative crowd exits. And here's another piece that will fix stressed. We're not just talking about price going up because more people buy. We're talking about an asset being institutionally positioned as a necessity like oil in the industrial age. Once the financial system locks XRP into that role, the value isn't a question of if, it's a question of how high. Even now, while retail is distracted by smaller market moves, the groundwork for this transformation is accelerating. NDAs, pilot programs, system integrations. The kind of work that doesn't make headlines until suddenly it's everywhere. By the time it's visible, the revaluation may already have happened. That's why positioning matters now, not after the fact, not once it's obvious. Think about this. The digital revolution in finance is no longer a distant future. It's here. Blockchain settlement, tokenized assets, instant cross-border payments. They're not concepts anymore. They're alive and growing. And XRP is sitting in the perfect position to be the universal bridge. So the real question isn't, will XRP rise? The real question is, will you be holding when it does what it was always meant to do? Because when the fix comes, whether it's thousands, tens of thousands, or more per XRP, the opportunity won't be to jump in after, it will have been to get in before. And that's exactly why I've made sure my own strategy is built around spotting these types of setups early. If you want the same tools, knowledge, and strategy I use, go grab the Ultimate Millionaire Investor Guide. Find 100x stocks in the pinned comment below right now. It's not just theory. It's a practical, proven method for catching the next big moves before the mainstream catches on. And don't forget the Moomoo link in the same pinned comment gets you free NVDA stock worth up to $1,000 with a $100 deposit. That's an easy win while you position for the bigger ones ahead.